My name is Andrew Stotts of the Valuation Master Class, and today we got another exciting presentation by one of our graduating students. If you want to build a competitive advantage in company valuation, join us at valuationmasterclass.com. Let me bring her into this. Kudirat, how are you?
Hi, Andrew. I'm good, and you?
I'm super excited. I know you've worked so hard, and I can feel your energy and your excitement. And so I think I just really want to bring you to the world.
I'm so excited to be here. So
Yeah,
happy.
yeah. You've worked so hard to get here. So now it's time to enjoy. Every time I introduce the Valuation Masterclass, I say, if you want to build a competitive advantage in company valuation, join us at valuationmasterclass.com. And I think we're going to see a demonstration of you building that competitive advantage. So I'm going to
Yes.
I'm going to share that screen and let you demonstrate. So 1 second. All right. So I have the screen up in place now of your presentation. And then I'm going to remove myself in just a second. And then you just take over. All right.
Yeah.
So you ready?
Yeah, I am.
Okay. So I'm going to remove myself now. And then you just take over and rock it.
Great. So, hi, good morning. I am Kuderato Ibola Salisu, and this is my presentation for Starbucks. Starbucks core markets moves to further greatness. I initiate coverage on Starbucks with a sell recommendation based on the target price of 59 US dollars, implying a downside of 41%. I derive my target price from a DCF based valuation using a WACC of 10% and a terminal growth of 4%. My highlights: sales decline erodes Starbucks' global valuation, strategic leadership resets targets long term stability, and the unionization drives rising labor costs and performance pressures. My risk: rising commodity prices and sales and supply chain volatility, consumer shift towards healthier alternatives, and the rise of local and global rivals in the key markets of Starbucks. Brewing success challenges into opportunities for growth. Founded in 1971, is the premier roaster and retailer of specialty coffee, Starbucks, with over 40,000 stores across more than 80 countries. Believing that Human Connection Initiative brings people together, the North America is the biggest market with 74% of revenue and also in terms of store, along with China. Starbucks thrives on innovation and offering a wide range of handcrafted beverage, teas, and snacks. Sales decline erodes Starbucks' global valuation. Starbucks faced a 10% decline in US customer transactions and a 14% drop in Chinese comparable sales during fiscal year 2024. And these setbacks were compounded by rising competition and macroeconomic pressures that led to a global comparable sales decline of 2%. Expanding its footprint to Asia Pacific beyond China could provide a buffer against regional economic pressures such as these declines. The strategic leadership reset towards target long-term stability. With the appointment of a new CEO, Starbucks announced its Back to Starbucks plan, aiming to revitalize the business by refocusing on customer experience and operational efficiency. This despite suspending fiscal 2025 guidance to reassess its strategies, the company raised its revenue by 7%, signaling confidence in its long-term growth potential. This strategic shift introduces uncertainty but reflects a proactive approach to stabilizing profits. Maintaining or modestly increasing dividend while initiating stock buyback could reassure the investors about the company's financial stability. And finally, unionization drives rising labor costs and pressures. Starbucks has faced growing unionization efforts in its US stores, with employees advocating for better wage and working conditions. For instance, leveraging technology to reduce inefficiency in sourcing and logistics can remove this kind of pressures on behalf of Starbucks. Financial year quarter one 2024 financial year saw a bit rise in EBIT margin. In the fourth quarter 2024, Starbucks experienced a reduction in revenue from 9,114 in the third quarter to 9,074 in the fourth quarter. The company saw a 4% year-on-year decrease in gross profit margin and a lower year-on-year decrease in net margin of 3%. Starbucks reported in the fourth quarter of 2024 recording EPS of 80 US dollars, which is a negative 26% year on year and a negative 14% quarter on quarter. Well, for the latest news about Starbucks is the fact that in August, the company announced that Brian Nicol has been appointed the Chief Executive Officer and Chairman of Starbucks Board of Directors, effective from September 9th, 2024, with Melody Upson, the former chairman of the board, becoming the lead independent director of the board. And in October 22nd, 2024, the company shared preliminary fourth quarter and full fiscal year 2024 results, reflecting the challenged customer experience and reiterating a fundamental change of strategy. And finally, Starbucks launched its first ever holiday refreshing beverages in US stores on November 7th, 2024. And the holiday season also brings back the return of Starbucks holiday cups and handcrafted espresso beverages. So for my constraints, well, the constraint to growth for Starbucks is very minor because the company needs to grow to increase profits and share price appreciation, and management's core financial mission is to deliver this growth to increase value to shareholders. And since growth is key, I like to consider constraints to growth rather than commonly discussed growth opportunities. So I see four ingredients to this: the capital, the operations, the markets, and the people that actually enjoy this. And I rank them from major constraints to minor constraints. So for my capital, I ran my capital a minor constraint because Starbucks net debt to equity was negative as of June 2024, having an investment grade credit rating of BBB plus, and its CCC, which is the cash conversion cycle, was a negative 4 days in 2023 compared to 1 day in 2019. So capital does not significantly constrain Starbucks growth due to its robust financial management and ability to access funds. And for my operation is also ranked minor because the supply chain risk is relatively low. Apart from fluctuating raw material price, Starbucks does not face a severe threat of dependency on supplier. The operational risks are well managed, making this a very minor constraint for growth. For my market is also ranked minor because there is a growing trend towards premiumization, with customers seeking out higher quality and more unique products. And the global specialty coffee market size is expected to grow at a CAGR of 11%. So the use of mobile app, loyalty programs, and delivery services has helped Starbucks to boost growth. And finally, for people, Starbucks focuses on training and development to establish a sustainable succession plan for its key management and supervisor position, which is why the constraint to growth on people is very minor. Revenue growth followed by new stores and strong beverage sales. The total net revenue increased by 12% to 636 billion US dollars in fiscal year 2024 compared to 32.3 US billion US dollars in fiscal year 2022, primarily due to higher revenue from company operated stores. And the growth in company operated stores revenue was driven by an 8% increase in comparable stores sales, which is 2.1 billion US dollars, attributed to a 5% increase in average ticket and a 3% increase in comparable transaction. By product, beverage accounts for 60% of revenue, food accounts for 18% of the revenue, and the other products that Starbucks do, they account for 22% of the revenue. Looking at the geographical breakdown, the North America accounts for 74% of the revenue, making it the largest country to bring in revenue for Starbucks. Overall, Starbucks appears to be average relative to 1,810 non-financial companies in USA, considering fundamentals, valuation, momentum, and risk. For fundamentals, Starbucks is ranked in the top 20 in USA due to strong profitability and high asset turnover. For valuation, it is neutral as it trades on a high PE relative to other companies in the US market. For momentum, it is neutral as both price and fundamental momentum have not delivered convincing reports. For the risk, they have a balance sheet risk. The balance sheet risk is high level due to the low current ratio, and the price risk is moderate with a beta of 1x. Well, very tough for competitors to have a stand because looking at my Porter's 5 forces ranking, it is ranking 60% overall. For rivalry among competitors, Starbucks is ranking 67. Are there many competitors of roughly equal size? 5, because no. Starbucks remains dominant force in the coffee industry with global markets unmet by competitors. Other chains have significant market price, none of which rivals its type and globally. Is the growth slow? No. The industry in which Starbucks is the consumer discretionary industry is not considered slow, as its growth mostly goes up and down depending on the economic situation. Is there some technological disruption? Yes, because significant disruption from technology is currently happening, such as the Internet of Things and the digital ordering and payment. Bargaining power versus suppliers. Do the suppliers have strong control of inputs that the company needs? No. Starbucks suppliers have significant inputs, but control is maintained through practices such as direct sourcing and adherence to ethical standards. It is hard for companies to switch from one supplier to the other because especially for its main product, the coffee beans, as the switching can cause supply chain disruption and delay in production. Would it be difficult for the company to do backward integration and eliminate suppliers? Yes, because Starbucks might not be able to handle the challenges. While Starbucks are specially integrated through initiatives like owning a farm and scaling this across its entire supply chain will be complex and capital intensive. Do the customers have alternative? Yes, but the alternatives are not necessarily direct competitors to Starbucks. But their alternatives are such as the local coffee shops and convenience stores that provide customers with other options, but they are not a direct competitor to Starbucks. Now, the customers put pressure on the supplying company, yes, because the customers can influence the company's decision, and this is evident in the markets like the US and the China market, where the competitors are shifting consumer preference towards more affordable and convenient options, are exerting pressure on Starbucks supplying company to perform better. Are the customers price sensitive? No. The customers of Starbucks, they know that the company is a premium company, of which its customers are aware of its great quality products and are ready to pay for it. So both new entrants and substitutes have the same flow because the threat to new entrants is rated 53%. Is it easy for any company to enter into the industry? No. It's very difficult and challenging looking at the already well established companies and brands of significant loyal customers, and a new company can find a segment to satisfy them. Can any company get access to raw materials? Yes, any company can get access to raw materials and staff, but they will still be on a difficult pedestal as competing to companies like Starbucks. Can new entrants easily reach economies of scale? No, new entrants can try to reach economies of scale, but they cannot match the current competitors, which is difficult and challenging. The threats from substitutes are the competitors switching costs low. No, customers look at quality and satisfaction, and with Starbucks brand and reputation, there is certain level of switching costs due to experience gotten because if you enjoy it, you have to come back. Is there little perceived difference in products? Yes. Not too obvious, but there are certain difference in their products and style of serving. Are there new competitors that can leapfrog? Yes. New competitors may not be able to be on the same scale, but they can actually leapfrog and might disrupt some of their activities. The leadership, led by Brian Nico, the CEO and chairman, with Brady Burer, the CEO of Starbucks International. Starbucks has 11 numbers of directors and 10 numbers of independent directors, with 64% of them being independent directors, which is compared to the US of 12 numbers of number of directors and 9 numbers of independent directors. Well, for the leadership, the top Vanguard Group has 9.42%, and BlackRock has 6.60%, with State Street corporations having the third number of 3.99%. Well, institutional investors have 75.77% of the ownership, with 21.6% being retail investors, and the final one is the 2.6%, which are insiders. Well, looking at the profitability growth consistently ranks in the top 10% among 910 large consumer discretionary companies globally. However, the rank fell to 5 in 2020. But the profitability in the top 10% for the whole period of 2023 and most recently, growth improved to 5 from 7 in 2023 and was at 2 in 2021. Asset efficiency was consistent for 2020 and improved to 4 in 2023, improving overall efficiency. However, strong expense control has more than offset the average asset efficiency, and it has shown world-class performance and consistently and comprise the main driver of the overall profitable growth rank. Well, looking at my global benchmarking, I have the profitability decile, which was used to rank my profitability, and the growth which is below average. We also have breaking down profitability because asset utilization is stable in the middle and the net margin is world class. The sales growth is not really stable in the in is more than the fifth decile because the 2023 October rank was in the fourth decile and the past 12 months was in the fourth decile, and my net margin change was volatile. Looking at the ESG, overall the ESG ranks 87, with environmental ranking 60%, the social ranking 100%, and the governance ranking 100%. Does the company have a resource reduction process policy? Well, Starbucks aims to have its carbon, water, and waste footprint by 2030, implementing various initiatives to achieve this reduction. Yes. Has the company faced any environmental controversies? Yes, Starbucks has been criticized for its use of single-use plastic and the recyclability of its paper cup, which are aligned with the plastic and not widely recyclable. Well, does the company have an emission policy? Yes. Starbucks has committed to reducing its carbon footprint by 50% by 2030, focusing on sustainable practices across its operation. Is the company engaged in emission trading? No. Does the company have any environmental eco green? Yes. Starbucks offer organic coffee options and have expanded plant-based menu items to promote environmental sustainability. For the socials, does the company have any health or safety policy? Yes, Starbucks maintain a health and safety policy to ensure the well-being of its employees and customers, adhering to industry standards and regulation. Does the company have a human rights policy? Yes, Starbucks has a global human rights statement outlining its commitment to respecting and promoting human rights throughout its operation. Does the company have a fair competition policy? Yes, the Starbucks standard of business conduct includes policies on anti-corruption, anti-bribery, and ethical business practices. Has the company implemented a quality management system? Yes, because Starbucks employs quality management system to maintain product consistency and safety. Does the company derive any revenue from weapons? Or no, they don't. That is not the case for Starbucks. For the governance, does the company have board independence? Yes, because substantial majority of those Starbucks board members meet independence requirements exceeding 38% threshold. And is the company also the CEO? No. The position of CEO and chairman are occupied by different people because Starbucks separates the role of chairman and CEO to ensure balanced governance. And does the company have any shareholder rights policy? Yes, it's available in the company website, annual reports, and corporate filing. Does the company have any insider dealings? None has been found. And does the company have any CSR, sustainability, and ESG reports? Starbucks regularly publish reports detailing its corporate social responsibility, sustainability, and environmental, social, and governance initiative, which is available in the Global Impact Report of the company. Now to my valuation. Profit, profit and loss statement. Well, the revenue of Starbucks grew from 36,176 in 2024. It was 37,623 in 2025, and had a consistent growth across 2025 estimates to 2029 estimates. And same goes for the gross profit margin, which could be as a result of the fact that the company is improving and also wanting to ensure that what happened last year, which was fiscal year 2024, or reduction in their performance does not happen again, and has taken initiative to do more investment. I had a net profit of 4,100 and 4,013 in 2025 from 3,761 in 2024. For my balance sheet assets, I had a cash and short-term investment of 3,797, which was an increase from 3,543 in 2024 actual, and a total assets of 31,816 from 31,339 in 2024 and saw a consistent growth from 2025 to 2029, at the end of which was 38,183. For my liabilities, well, the company Starbucks is in control of its liabilities because its long-term debt saw a consistent reduction from 14,320 in 2024 to 14,292 in 2025, and a consistent reduction down to 14,095 in 2029, with my overdraft and short-term loans of 1,555 from 1,249 in 2024. Recent earnings was negative due to the fact that the company does a strategy of stock buyback, or how should I say share repurchase. I'll further explain that in the next slide. So for my cash flow statement, the depreciation was 2,770 because the company has assets has capital expenditures that are depreciable and assets that are depreciable. So my capital expenditure grew to 2,805 from 2,778 in 2024. Look, in the explaining the company's initiative of increasing capital expenditures to further improve customer satisfaction. And we saw a change in equity, which was the fact that the company offers share buyback or share repurchase, which was a consistent share repurchase from all through the year from 2022 down to 2029. For my ratios, I had the current ratio increase. We had the current ratio consistent from which is 0.8 and also 0.8 down to 2026, but it's saw reduction in 2027. The asset test ratio had a consistent from 0.6 in 2024 and down to 0.6 in 2026, for a little reduction in 2027. Well, to my cash conversion cycle, which is getting lower, which is from 19 in 2025, it's reduced to negative 15 in 2027. The company does not have any debt to equity ratio from their actual year of 2022 down to their estimate year of 2027. The effective interest rate was 4%, consistent in the forecast year. Now to my ratios. I grew my revenue by 4% all through the year. Look, considering my story of being optimistic about improving from the negative in 2024 and increasing their revenue growth through customer service improvement and efficiency, and a recurring EPS of 7.2 in 2025 and 0.9 in 2026, a net profit margin of 10.7 and 10.3 in 2025 and 2026. Well, my assets, I need there was the company does not have any asset to equity ratio and also any return on equity. My free cash flow data. Well, my free cash flow to the firm had a consistent increase, but a slight reduction in 2025, but a consistent increase across all year from 3,881 in 2025 estimates to 4,514, down to 4,834 in 2029, and also a consistent increase into the fade year. My cash flow part also had a consistent increase into the fade year, down to 2031 of 11,965. Now to my relative valuation. On the forward 2025 PB multiples is negative. The company has a share repurchase strategy whereby they buy back their shares, which has been going on for several years. As a result, equity is negative, making the PB ratio valuation irrelevant. On the forward 2025 PE multiples, Starbucks trade at a significant premium on the consumer discretionary sector in US, Asia, ex-Japan, and the world. Thus, Starbucks seems very expensive on the PE basis, trading at a PE of 27.9x. I expect its EPS growth to be positive in 2025 estimates to be 7.2%, which is quite lower than the other peers from US, Asia, ex-Japan, and the world. The results in Starbucks trading at a significant premium based on the 2025 estimates PE to EPS multiples compared to Asia, the world, and the US peer. Well, I assume a risk-free rate of 3%, given the current interest rates fall and the market equity risk premium for the US market of 10%. Starbucks has been a high beta stock, so I assume a beta of 1.0x, which is slightly lower than its previous average, resulting in a cost of equity of 13%. I forecast a capital structure with around 25% debt to total capital, and this results in a WACC and a discount rate of 10.4%. I use a terminal growth of 4% and a free cash flow to the firm because Starbucks has significant capital growth and may issue or repay debt regularly. In my base case scenario, I anticipate a gross margin of 23%, leading to a value of 59% share based on the free cash flow to firm methodology. And this represents a 41% downside compared to the current market price. In my sensitivity analysis on the following page, I will show you that the optimistic case assumes a gross margin of 25%, resulting in a target price of 63 US dollars. Conversely, in the pessimistic case, the gross margin is assumed to be 21%, yielding a value of 54 US dollars per share. My sensitivity analysis, looking at my gross margin, optimistic and pessimistic, and my base case values. Now to my risk. The main risk for Starbucks is the supply chain volatility. Well, the rising commodity price and the supply chain volatility, because the cost of coffee beans and other raw materials is sensitive to global market fluctuation, climate change, and geopolitical events. Well, consumers shift towards healthier alternative. Consumers shift towards health-conscious choices and alternatives like matcha, kombucha, and plant-based drinks may impact Starbucks' core offering, but expanding its portfolio of health-conscious and plant-based beverage while leveraging its brand to position these options as premium choices. The rise of local and global rivals in key markets. While a notable revenue slowdown in North America, Starbucks' largest market, highlights an intensifying competition from both large players and independent coffee shops, but by strengthening its US presence by focusing on store modernization, enhancing digital engagement through mobile ordering and reward, can and also tailoring the localized products offering to retain market dominance and reignite growth. Call market move to further greatness. I initiate coverage on Starbucks with a sell recommendation based on a target price of 59, implying a downside of 41%, and I derive my target price from a DCF based valuation using a WACC of 10% and a terminal growth rate of 4%. My highlights: sales decline erodes Starbucks global valuation, strategic leadership resets targets long-term stability, and unionization drives rising labor cost and performance measures. To my risk, rising commodity price and supply chain volatility, consumer shift towards healthier alternatives, and the rise of local and global rivals in key markets.
Excellent.
Thank you for listening.
Excellent. Okay, we just have time for one question, and it comes from Sierra Road. He says, it seems like Starbucks hasn't lost its competitive edge. Like if you look at the sales growth, it's down. It's not so strong, but it's still not bad compared to
Yes.
other peers. Why do you think that the share price will go down?
Well, I think the share price will go down because if they are, I'm being not so optimistic and not so pessimistic about the company, but I feel if they are unable to like recover from the loss from 2024 very well, they are having like people actually trying to move from them if they are not able to implement certain structures like having LDR products for people, and also improving on their customer efficiency and customer improvement. So I feel like the valuation will go down, though they are currently overvalued according to my valuation. But if they are unable to like improve more, and not looking at the fact that they're already a big brand, and also and leverage on that, but they are able to improve better, they might not be able to recover from a lot of setbacks, and they might reduce down to a certain level.
Okay. How does it feel to graduate from the Valuation Master Class?
So happy.
Yeah.
I'm so happy. I'm so happy. So joyful. So joyful. It's
Ex-
been
ex-
a lot. It's
yeah.
been a whole
Explain
lot.
a little bit about your journey. Tell
Okay,
us.
so having to value 9 different companies within a span of like within a short period of time, having to focus on different companies at a time. It's a lot. And thanks to the guidance from your team and you yourself, I was able to like make it to this space. It's so great. It's not been easy, but it's been fun because I met, even through this, I met great people like Siraj. Siraj is my best pal right now. So
Yeah,
yes,
he's great. And tell us, like, what are the skills that you have now that you didn't have when you went into the valuation masterclass?
I would say valuation. Just a short answer, I would say valuation. That's one skill I didn't have when I came in, and now I have it. It's obvious. It's clear. I can do this over and over again. Even just wake me up from sleep and say, "Could you guys come and value this company?" I'll be like, "Okay." I'll be like, "Let's just go there. Let's see how it goes," and I'm going to do my best and make you proud.
Fantastic. Well, uh, congratulations and
Thank you.
well done. And hopefully, we'll see you in Lagos one day. Hopefully,
Very soon. I can't
yes,
wait to host you.
yes.
Well, when you come to Lagos, there's this meal of ours that we call pounded yam. I I'm sure you love it.
Fantastic. All right, I'm going to take you
Yes.
out of this for right now, but great work, and I'll be in touch soon. We'll talk on Slack.
Yes.
Yep.
Thank you.
Wow, incredible. A huge amount of work that went into that Starbucks report. And she went through so many different points that she's looking at. It made me also think, I think we saw one of the questions that came in saying, come on, maybe it's not so bad for Starbucks. It's interesting how a company like Starbucks can go down and then recover. They have so much resources and there's so much brand value, so it's going to be interesting to see what happens. Are you a seller or are you a buyer? Well, we just heard the sell story. So if you want to build a competitive advantage in company valuation, like Kudirat we just saw right there, then join us.